Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action on the D Street, the trading setup as well as the market strategies you need to follow for the day. Remember, we'll start off with a recap of last week. Benchmark Nifty 50 index staged a strong rebound on Friday. It snapped a three-session of a losing streak amidst buoying cues from Asian markets and of course advancing US futures as well. We managed to end above 25,100 mark as far as Friday's session is concerned. But again, when we open up in this new fresh week, the gift Nifty is already trading with cuts and is indicating negative start to the Indian stock markets today. Why is that? The Indian equity markets are beginning this new trading week amidst escalating geopolitical tensions in West Asia. Early Sunday morning, we saw that US had conducted airstrikes on 3 Iranian nuclear sites. The big question, was the US strike successful in taking out Iran's nuclear capability? Well, US has claimed that Iran's nuclear capabilities have destroyed. Now, there are independent verifications that are happening, which are talking about the extent of the damage that remains unavailable at this stage in time. Now, Iran's Atomic Energy Organization insists that its national industry will persist. The concern remains on the 400 kilograms of 60% enriched uranium that Iran has reported to the UN as well. Now, what has happened is that globally we've seen China and Russia have condemned these strikes, but again have not offered any military support to Iran at this point in time. There is a risk of closure in the Strait of Hormuz that has risen. Iran's parliament backing closing of Strait of Hormuz is something that will be watched out for as an impact in global economy and the markets as well. Now, US has called on China, Iran's biggest oil customer, to prevent Iran from closing the Strait of Hormuz as well. Whether that will happen, how these things develop will be extremely important for the Indian markets and investors also to track. Now, what is happening globally right now is that the Asian markets are down 0.5 to 1% in trade today. This was right after the US strikes on Iran had taken place over the weekend. You can actually see across the board, Hang Seng, Nikkei, Kospi, all of them are down in trade. Gift Nifty is indicating a start at 25,000, 0.5% lower in trade. Only Chinese index is slightly higher in trade. In fact, after the close on Friday, US futures now are certainly down by about 0.5% as well. That are also indicating a dampening of further sentiment. Already on Friday, we had seen all the 3 benchmark indices of US close in the red with 0.5% decline on the Nasdaq as well. Now, of course, at this point in time, the Gift Nifty is trading with a discount of more than 100 odd points from the Nifty closing, that we had seen on Friday, and now is indicating a gap down start for the markets. How was the FI position? Well, there was an MSCI rebalancing, and that led to some buoyancy also on Friday's, kind of sentiments that we had seen for the Indian markets. FIs had also bought 7,940 odd crore rupees. A lot of it is also skewed towards the MSCI rebalancing. DIIs were net sell of 3,049 odd crore rupees in the cash markets. Of course, there'll be a whole host of stocks that we will be watching out for and how situations develop as well. Now, let's look at welcoming our guest on board. We will be joined by Mr. Vineet Bulinchkar, Head of Research at Ventura Securities, just in a bit. But we'll try and track some stocks and probably some brokerage houses reports also for you in the meantime. Let's look at some stocks then. From the defense pack, I have an eye on HAL that has secured an SSVL technology from ISRO by submitting the highest bid of 511 odd crores. From the renewable energy basket, I'm looking at Bari Renewable Technologies. The value of the company's existing solar EPC order has been increased by 246 odd crore rupees, raising the total project cost worth 1,480 odd crores. Again, from the defense pack, BEL is in focus. It's received new orders totaling 585 crores since last update on June 5, and therefore we are looking at accumulating orders there too. Granules India is in focus. The pharmaceutical major has announced as on Friday that its unit API Unit 1 facility in Telangana has underwent a US FDA inspection, which ended with the issuance of a single Form 483 observation. We look at some dampener there. As far as the other stocks are concerned, we have the ONGC stock that will be in focus. The board has given its approval for providing a corporate guarantee or up to $412 million to support OVL's overseas IFSC operations as well. From the Pharma pack, I'm also looking at Biocon that will be in focus. It secured a 4,500 crores, approximately $523 million by launching QIP on June 16. That's something that we will keep an eye out on as well. Of course, there are many other stocks like TCS will also be in focus. The company will now set up 2 new automotive delivery centers in Germany and engineering center in Romania as well. So that's something that we'll watch out for. Again, from the Pharma pack, Dr. Reddy's is in focus. It's received a US FDA tentative approval for carbidopa as well as levodopa, which are the 2 drugs which are very, very critical for the company, and that's something that we will look at. Encure Pharma from the Pharma pack will also be in focus. The company will acquire the remaining 20.4% stake in its arm, Zuventus Healthcare, for 725 crore rupees, making it a completely wholly owned subsidiary. That's going to be important to track as well. Let's now look at some of the brokerage houses updates that are going to be in focus. IT stocks is something that you should be looking at. Accenture, remember, has come out with its results that are ahead of estimates. Here the revenue is up by 7% in constant currency terms at $17.7 billion versus the estimate of $17.3 billion, resulting in up 6% in constant currency. Managed services up 9% on a constant currency basis as well. What we've also seen is there is a guidance that has been hiked from about 5 to 7% to now 6 to 7% as well. So the lower end has been increased. That's something that will be reflecting on the Indian stock markets too. Now, small finance banks will also be in focus today. The RBI has revised the priority sector lending norms for small finance banks. Small finance banks overall priority sector lending will be from 60% versus 75% earlier. That is going to be in focus again. Apart from this, of course, we'll be looking at the crude oil prices and the impact on the Indian markets. Remember, already this morning we've seen a 5% surge from the time the Israel had launched attack on Iran. From that time already a 10% surge on crude oil prices has already been seen. $81 per barrel is something that we're looking at now. Goldman Sachs group has flagged that that oil prices could actually further move upwards and gas prices also could take higher. This is after the US has struck Iran, even as the bank's base case outlook hinges on major disruptions to supplies from the region. If oil flows through the Strait of Hormuz were to drop by half for a month and remain 10% lower for another 11 months, Brent crude, they believe, could spike to as much as $110 a barrel. That's something that we will be discussing with our guest as well. Apart from this, from the telecom space, Bharti Airtel could be on your radar. Jefferies has come out with a report, a buy call there, a target price of 2350 rupees per share. That's because the company operates in large market, and of course what we are seeing is that it has low competition right now. There is a strong runway for mid-teens revenue growth, they believe. Structural decline in capex intensity, valuations have room for further re-rating is what they believe. Jefferies also has come out a report on Chola Securities. Here Chola Investment, that they have said they have a buy call here with a target price of 1800 rupees per share. Now what we are also given to understand is that they are saying there is a soft growth and asset quality year to date. It has been soft as well. Monsoon will be key for recovery, and the management has also guided for a 10 to 15 basis points NIMS expansion. While flat credit cost in FY26 is what they expect. They believe near-term weakness could be seen as a risk, but they also see this as a buying opportunity as NIMS are likely to rise post Q1 and then strengthen in FY27, they believe. Credit cost and OPEX to ease in FY27, boosting the ROA and the ROE over FY25 to FY27 is what they believe. Let's start to look at the markets first. They've started to tick in the pre-open, 24,847 right now. There's an over 1% kind of a decline, 272 points lower in trade, which means that not only we have given up the 25,000 mark, but we've also tested about 25,000 or 24,900 right at the opening level. So that's something that we are looking at as well. We also now have Mr. Vineet Bulinchkar, who's joining in on the program with us to share with us his views on the markets. Warm welcome to you, Vineet ji, and very good morning to you. Thank you so much for taking the time out. We are again back at looking at the risks in the geopolitical world as they are rising. Over the weekend, we've seen how US has struck Iran's nuclear facilities. Help me understand, how are you reading it as far as this could mean for the sentiments on global as well as on local D Street?
So, almost 25 to 30% of global oil traffic moves through the Hormuz Strait, and blocking this would obviously create a lot of shortages. What it means is that it exasperates the position for Europe completely, because they were relying entirely on the Middle Eastern oil and other places, and oil overall will have to go up, because you're removing out one of the largest producers in the world out of circulation and many other markets, right? Suppliers. To that extent, we have seen the early fall come in, and against this backdrop, uh, I believe that India is very relatively insulated, because very little of our produce is coming from the Middle Eastern markets. Obviously, gas prices will go up because Qatar is one of our biggest suppliers. But we have diversified our uh, purchases from over 70 countries. So availability of oil will not be an issue, but the pricing can definitely create problems for energy uh, costs.
Absolutely, Vinay. Let me also mark out for all our viewers to understand what our own Union Minister for Oil, Hardeep Singh Puri, has really said in a quote. He has said, and I will just mark out that. He said it's very difficult to speculate on the price factor. The oil price for a long time has been between 65 and 70. Then it was between 70 and 75 for a long time. Of course, he believes that when the markets open on Monday, there will be consequences of the closure of the Strait of Hormuz. Although he does say that for a long time he's been marking that enough oil is available for global markets. More and more oil is also coming in, particularly from the Western Hemisphere. Even the traditional suppliers would be interested in keeping their supplies because they also need revenue. So hopefully the market will factor in that. And what they've said is that the Modi government has over the past several years not only ensured stability of supplies but also affordability, and they will take all the necessary measures to ensure that. That's what he had marked out for us. Now, of course, we have been seeing a slow and gradual move, I think, on the oil prices from the time Israel struck Iran first. It was already up 10-15% from those lows that we have already seen. Goldman Sachs is already penciling in $110 in case the situation elevates from here. When does it start to become a pain for us? Will it only be restrictive to an impact on OMCs? Or the oil importing companies, will there be a larger impact that we should be prepared for, sir, now?
So I believe that a larger impact should be penciled in, but India will be relatively better insulated from the global oil shock. I have two reasons for this. Is that we've seen oil prices earlier also touch 85, $90, and during that phase, our oil prices had remained at about 100, rupees per liter. You know, since then the dollar has depreciated a bit, so we could see some elevation in that, from that 108 to 110 level price point, to say about 114, 115 at most. India has a lot of levers to cut back on the excise duties which are charged, right? To keep ensure that oil keeps flowing in at current levels, because beyond these levels, I think it will become a thorny issue in terms of cost, and also impacting our fledgling economy. Already, our economy is very uh, critically poised. We were just about slowing down, and then
Yes.
we had the tax subsidies, and now we've had the banking rates come down, and suddenly we have inflation spiking, potentially spiking going into the future. So it kind of puts a floor on the money supply that comes in. Along with this, what it also does is that it might have the RBI again wanting to reverse some of its policies of going slow on them to check inflation.
Okay.
Yeah.
Okay, so that is a possibility, you believe, that so far we have been seeing RBI being aggressive with the rate cuts, especially in the previous one, where a 50 basis points of a rate cut happened, change of stance also happened as well. And it seemed like, the RBI was pretty dovish looking at all the scenarios that were developing on the inflation front, and it needed to prioritize growth as well. So could that stance again change with this development?
I think it could possibly. You see, it's always a measured outlook, right? So first priority of the RBI is to manage the inflation to keep cost of living as low as possible.
Yes.
So I believe there would be two kinds of actions out here. As I said, government going slow or reducing, your import duties to keep, or excise and all the pack of duties to keep the price low. At the same time, there could be a little bit of staggered way in which liquidity is drawn out of the system in a other than the predetermined manner, and then you see how the economy flows. But to my mind, it's not too much of a problem. I think this situation, God forbid, it doesn't escalate where it
Yeah.
consumes the entire region. But I believe that it this problem could persist for another month.
This problem could persist for another month. Any expectation of what could be the response from Iran? Could this escalate further from here? How? What do you make of the kind of dominance that US wants to exert, or hegemony that US wants to exert by doing the airstrikes that they have already indicated? No doubt that they are talking about, they are the most powerful. They're talking about MIGA. I mean, Donald Trump, after making America great again, he's now talking about making Iran great again. How would you really look at situations developing on that front?
So we need to understand that this regime is still in place, is still in control. There are celebrations on the street with these actions having taken place. So the large part of the community which is rising against was kept down by this regime. It was a very draconian regime. But I believe that there is a chance that there could be a internal uprising, where the will of the people is implemented, and there could be a regime change. So, to my mind, this America removing themselves from the war like India did, in the war against with Pakistan, will now leave the onus on Iran to do what it does. So Iran regime presently will obviously want to hit back, right? Because their pride has been hurt as a nation. And the easiest and the simplest thing to do would be to close the Hormuz Strait
Yes.
or hit back America. But if they hit back American bases, etc., they would come in for further action. And to my mind, I think the only action that they can do is to close the Hormuz Strait
Correct.
and try to bring the international community to the negotiating table.
Okay, so that's as far as what could happen globally. Now, the impact on India, sir. We do know that our own minister has talked about that how we have diversified our supplies, and our dependence on just one state is not there anymore, and therefore we may not be as impacted. But there are experts who are talking about that in case there is a long time of a closure, maybe a week or two is okay, but if it extends for a month and over that, then what happens? Because of course India's reliance on Gulf oil, LNG is too much. What could that do to the fuel prices, petrol, diesel, inflation, like you pointed out, trade disruptions? Those are all the factors that we need to discuss as well. How are you looking at that?
So trade could be disrupted because the Houthis have said they're asking any kind of ship to evacuate the Red Sea. Number one. Number two, if you close down the Hormuz Strait, you're not going to let any of the oil, flow out, oil trade happen. But I don't think that the rest of the Gulf will want to see their economies get choked. So there would be a kind of a solution put to this. I'm definitely sure that would come out. Secondly, if you see the Chennai Vladivostok route that India has operated with Russia, is now a regular traffic for containers, and that will ensure that India keeps getting its oil flows. India gets barely 15, hardly any, not a very large percentage of oil from this place. We have diversified our supplies to almost 70 countries. So all this adds up very well, that the situation is manageable. We will try to, minimize the impact on the Indian markets. And, if this situation goes beyond control, what will happen is that India would be relatively well insulated from the rest of the world, but the trade will get damaged, of course.
Okay. Vineet sir, now help us understand, for an Indian retail investor, like you said, that the problem could persist for a month. So, what should, for a trader, the strategy be? Are there spaces where you should stay clear from to probably save your portfolios from getting, knee-jerk reaction impacted? How should you really move forward from here, at least in the short term, till the time there is more clarity?
I think domestic themes look very strong. Domestic themes are not going to get impacted significantly, number one. Number two is energy allocation can improve. So coal prices are obviously going to go up, and alternate energies will do well. Your green energy pack will do relatively better. So I think these are some of the baskets where you should move, and anything which is interest rate sensitive, or which is, you know, uh, doing with the international trade should definitely be avoided for the time being.
Avoided for the time being. Okay. Remember, in the pre-open trade, we've seen 24,939 as the level that we have settled at, 0.67% lower in trade. We are just about 15-20 seconds away from the markets to tick. Right now, it seems like all the sectors could be opening on the back foot. There could be just news flow related stocks that could be in focus. Stocks like BEL, Nestle, IndusInd Bank, ONGC, they could be in focus again. Remember, ONGC is in focus because of the crude oil prices spike as well as its own news flows. Yes, we have the first ticks. 24,965 is where we are at, 144 points lower on trade as far as the Nifty is concerned. All the sectors down into the red. We are looking at India VIX, in fact, spiking 3.9% higher at 14.2% up. On the Nifty, you have names like Bharat Electronics, Nestle, ONGC, Cipla, SBI Life as some of the gainers. Rest all of the stocks seem to be opening on the back foot. You have Geo Financial Services down. All the IT related stocks are also down. Remember, Infosys, HCL Tech, Wipro, they are all down. We have the Accenture numbers, and after that, we are seeing this reaction come in. As far as the IT stocks are concerned. On the F&O space, you have SBI Cards, that's higher. Nestle, Oil India, ONGC, again from the crude oil impact, that's up. But on the downside, you have Astral, Supreme Industries, Blue Star, Infosys, Tata Elxsi. These are the ones that are down in trade. HL, BL from the defense pack are up. Some media stocks are also hovering higher. All the sectors are down, with IT sector as the top loser now, 1.3% lower, followed by realty, consumer durables. Those are the other sectors that are down. Let me quickly take you to the broadest index and see if there are any names that you could track in case you still want to take a trade. Names within the Nifty 500 that are up. Imami Realty is up in trade. You have very far and few between names. Swan Defense is up in trade. You have names like Indo Solar, that's up. Very far and few between names that I could probably talk about. Sikal Logistics is up in trade. These are some names that are hovering higher, but what is down? You have many names that are actually, testing weakness, and 5-6% high single digit lows as well. I think defense is the space to watch out for. Apart from HL and BL, now ship deck builders are hovering up. You can see Mazagon Dock now showing us some kind of a green at this stage in time. Let's also welcome Mr. Rudra Murthy from Vachna Investments now joining in on the program with us. Hi Rudra, very warm welcome to you. Good morning. Help us understand with your fresh take on the markets right on the back of geopolitical tensions, rising crude oil prices again coming in as overhang.
Sakshi, very good morning and thanks for having me in the show. See, last time when I spoke with you, I was definitely cautiously bullish. And yes, my stance of cautiously bullishness will continue. Now, I will tell you why. There are too many events coming all at once. At one end, we have crude oil prices now clearly above $76 per barrel, which is an important technical level. So till crude oil remains above $76 per barrel, I am talking about Brent crude, this market is still not out of the woods. No doubt technically for very short term, yes, market is showing lot of resilience. But my question is for how long can it last? So you cannot have a situation where you have war at one end, you have Brent crude going up, you have dollar going up and rupee weakening, and on top of all this market to continue going up. That cannot happen. But for me, yes, we are definitely resilient compared to other markets. And yes, you have to be very sector specific and stock specific in this market to make money. And if you are a retail crowd, what I would suggest you is stay away, take some holiday, spend time with family, visit strong and powerful temples, read a lot of things in this time where you have to preserve your money and not to make money, and try to do that, you will only lose much. So these are times where you have to spend time on your family, on your learning, on visiting temples or wherever you get that higher level of consciousness. So for me, this is definitely a tough market. Retail has to stay away. If you are good in picking sectors and stocks, then yes, this is the market for you to be there, or else better to avoid.
Okay, got that. Let's go back to our conversation with Vineet as well. We are looking at, of course, only the upstream companies hovering higher, but downstream ones are actually weak at this point as a clear reaction that's coming in from the oil prices. But IT stocks, I wanted to discuss with you, Vineet. How are you looking at that? Just when things were getting back on track on the tariff front, it was seeming that just how US is approaching with the negotiatory tactics as far as the other countries are concerned. India still has to strike a deal on the reciprocal tariffs. We are getting to see Accenture earnings come through, guidance coming through, and yet the IT stocks are damp. 1.2% lower, 38,500 is the index level. How are you looking at IT stocks?
So IT stocks are in challenges of their own, and their challenges come from demand. As I've been pointing out on multiple times, I believe that uh, IT is not going to be defensive when the uh, world cracks. It's no more defensive. There are too many factors at play, and when you have such issues that take place, automation starts accelerating. When automation accelerates and job cuts are happening in the US, allocations to IT are also going to come down. So I believe that IT is fairly too overvalued in large parts of the pockets. My suggestion would be not to get carried away by this depreciation impact on the rupee, because it's going to be clear impact on the earning revenue front for companies.
Okay, so that's the IT pact for you. But the one that's hovering higher is clearly defense. I mean, from the time that India-Pakistan conflict started, we already had seen the second rung of a momentum build up as far as across the defense space is concerned. Now there are further geopolitical tensions that are erupting. I mean, people are talking about more and more conflicts that could continue, to escalate. How would you look at defense space at large? Do you think investors have a case to still bet big on the defense story in India?
So when you see a power diminish, a large power which was in a sort of a unipolar world come down, obviously regional conflicts are going to go up,
Yeah.
right? And one of these, all the high profile conflict which could emerge after this is going to be the Taiwan one issue that comes to light. So there is going to be constantly some geopolitical issue burning everywhere, and that is when every nation would want to protect itself, will want to arm itself, and that presents India with a fantastic opportunity because we had projected about 30,000 crores of exports by 2030. Today we are talking of 3 lakh. So our export targets are up. We are supplying to 100 countries. If you leave, today, who are the largest suppliers of armaments? US, Russia, Europe, and Israel. All these countries are at war. Okay. On top of that, you have far excellent, defense technology portrayed by India in the war with Pakistan, and that everyone wants to have. And now the defense ecosystem is also very well developed in India. So I think that defense stocks over the next 5 to 10 years are going to have a very, very robust growth story. And I believe that one should remain invested in.
Any key stocks that you are selecting? I mean, would you go with large caps like HAL, BL? Would you be big on the shipbuilders, Mazagon, Cochin, GRSE? How are you selecting the players within this basket for yourself and for your clients?
I think, so if you look at HAL, the engine issue is already resolved. So, now you have the supply removed. So, HAL becomes a very good play. Look at BEL, it is not restricted to any one point of things, and you're not building very large vessels like, ships or etc. You're supplying more, a lot of things across various different industry channels of defense. So that becomes one of the marquee places to look at. Look at drones, look at, different, from the private space, there are so many companies which are doing barely 200-300 crores of sales. Their sales are going to jump in quantum because now they're only got approved and they'll get orders, and their orders will be flush. They will get advances because security is very important, and that entire virtue cycle is going to play out for all the defense players. You have to just go there and find ones which are really doing well.
Okay, let me also take Rudra's view here. Rudra, I remember last time around when we were discussing, you were saying that you would now stay away from defense. How are you looking at the defense story at this point in time? Do you think with these rising geopolitical tensions globally, is there still a case to look at defense afresh, or the valuations don't match up?
Sakshi, I was very clear I will stay away from defense, but I will be buying only 2 stocks there, that was BEL and HAL. I said it should be in everyone's portfolio without fail. But yes, if you look at the shipping building stocks like your Masgav Dock or GRSC, they are all very, very highly valued. See, in fact, they are discounting earnings of 2-3 years ahead right now. And for me, having no margin of safety and investing for a shorter period of time into them was not advisable. But for sure, BEL and HAL, even at current market price, I advocate a buy, and I was buying it even last week, and I was advocating a buy on both BEL and HAL. But especially if you see the shipping stocks, and even for that matter, specifically if you see Masgav Dock, so all these are so richly valued, and they're discounting 2-3 years of earnings ahead. So for me, that was a concern. I'm not saying they're bad stocks, but they are great companies, but at greater valuation. So for me, unless you have a 5-year kind of a time horizon, I may not pick any of these shipbuilding companies, but for sure, even at current market price, I will be a buyer in HAL. I'm saying HAL will be your next Indigo kind of a stock. It will be the next Bajaj Finance kind of a stock, and you should hold HAL in your portfolio. I won't be surprised to see 8,000 to 10,000 to come on HAL in next 1 year. That's a return of 50-60% in a frontline stock. And similarly, if you see BEL at current market price of around 410, in fact, I was advocating a buy at 380, 390 zones onwards very recently. Even at 410, 415 right now, if you are buying BEL, yes, stock can give 20-30% kind of a return in next 1 year. So my target is around 500 to 600 on BEL, and HAL can go up to 8,000. 6,000, and both are F&O stocks. Definitely one can take a long position and roll over it for a longer period.
Okay, so that's the defense story and how both of our guests are really looking at it. Vineet, we will just take a few questions with you before we have to let you go. One is healthcare pack that I wanted to discuss with you, especially the diagnostic names that so far had been coming up as a good thing that everybody was looking at as a core portfolio. Why am I talking about it? Over the last 24 hours, we've come to know that Amazon India has launched home diagnostic services in at least 6 cities as a trial. And what we are given to understand is that Amazon will be entering the space of delivering online medicines through Amazon Pharmacy. It had also launched a countrywide virtual doctor consultation through Amazon Clinic as well. So it's completely entering into the digital healthcare space now. What does it mean for all the brick and mortar operators at this point in time? Although on the diagnostics front, all of those frontline players have also been expanding digitally, because when was the last time that we remember we had actually gone to a diagnostic center to get our blood tests done? It's all now done at home. We are now so used to of it, and makes only more sense that more and more players will enter to talk about this lucrative space. Amazon being a deep pocketed player entering this space, how do you see it for the incumbents?
I think two things are going to happen. Market will or get organized faster. Margins could come in for a shrink initially, because obviously Amazon is going to do penetration pricing, and you have to look at players who have got a clear cut, good breakup of radiology services as well as pathology. Because radiology is something which online Amazon will not be able to do. They'll have to do tie-ups. And pathology is something which can be offered everywhere. So I think developing these radiology services is very important. And players who have got a good breakup of radiology and pathology will strive to do better. So I believe that this is a very important aspect to look at. So I think that's going to be the way it plays out.
Okay, got that. Rudra, if I have to ask you on the healthcare space, how would you look at it? Where do you find the best opportunities? Is it in the hospital space? Is it in the frontline pharma space, or diagnostics? What is your choice of space to retail investors?
See, for me, the frontline pharma is much better if you have to pick up stocks from this particular broad sector. So for me, I've always advocated Laurus Lab as one of these stocks to buy and keep it in your portfolio. In fact, people who want momentum, yes, valuation is very expensive, but still worth having that stock in your portfolio is Divi's Lab. Because if you see even the chart pattern, every time it keeps making the higher top, higher bottom formation, stock is in a clear uptrend, and any dip because of overall market correction, if you get, definitely you have to have Divi's Lab in your portfolio. Laurus Lab is a stock which can go towards that 4-digit mark of 1,000. So even from current market price of 650, there's an upside of 30-35%. Even if it can give that move in next 1 year, that is definitely a worth stock to have in your portfolio. So for me, Divi's Lab, Laurus Lab, these are stocks to own. In fact, Glenmark also, if you see, the earnings last quarter was really good. Technically, the stock has given a clear breakout, and for me, Glenmark is a stock which you can definitely have in your portfolio. Stock can head towards the 2000 mark. So Laurus Lab and Glenmark will be my top pick based on valuation. But if you want to pick a stock based on momentum and chart pattern, yes, for me, Divi's Lab will stand out. So these three stocks I will advocate from this space, namely Divi's Lab for momentum, and for valuation and to have in your portfolio kind of a stock, you can look at Laurus as well as Glenmark.
Okay. Vineet, before we let you go, would you mark out for us and for our retail investors, any other space that you are clearly watching out for as the story to be played out for the rest of the current, calendar year, 6 months to go? What would your top bets be?
I think I would watch this UPS space very keenly. I believe that there those little bit of costs are going to come back, and there's one stock called Fino Payments Bank which is looking very good. it benefits from this, and they also have their, you know, there's a possibility that their banking license will be approved very quickly. So I think that is one stock which can do very well, and it's very well positioned in this digitization come uh, beneficiary of the UPI costs that go up.
Okay, got that. All right, Vineet, we will thank you then for being with us on the program and helping us with all your insights. Always a pleasure to host you, and hope you have a good day. We'll see you soon. On another edition of Market Today very, very soon. 24,900. Rudra, if you could look at the first 15 minutes of the candle for our viewers, assess it and help us understand, is this going to be, on the downside? Today again, do we have to be prepared for further cuts from here on, or will this be probably the dip that will be bought?
Sakshi, a very tough question right now for me to answer. The best way to do is just to stay away from market and wait for clarity to come. Even having no trade is also a trade, and cash is king. For me, these are times where you have to preserve your capital. For me, there is no clarity in terms of trend, and fundamentally also look at the news flow and developments happening around. Number one, today Accenture came out with that result as well as their guidance. For me, Accenture's share should have gone up, but the stock was down 6% in terms of growth estimates being higher, in terms of numbers being great, but their order book was a big question mark. It was below expectation. So for me, IT stocks have already taken it on the chin based on what happened to Accenture, and IT definitely on chart was showing some signs of recovery, and now I have to wait out and see how results will come from our IT stocks. But there also you have to be very stock specific. I will be very keen in IT as a sector. Look at stocks like Tech Mahindra, look at stocks like Coforge, Persistent System, which I have constantly recommended in your show. And for me, yes, Persistent, Coforge and Tech Mahindra are the best stocks in IT if you want to stay with IT. I thought IT is emerging as a good sector where you had definitely margin of safety, valuations are definitely attractive at current market price in general, but you have to be very stock specific. And for me, I want to wait out and see what will happen from our IT companies like TCS, Infosys, how will be the results from these bellwether IT company. And if you see overall market, yes, very, very important point. Look at what was Friday's low on Nifty. I'm giving you even the reasons behind my analysis. Nifty on Friday gave that big move, and the low on Nifty spot was 24,783. So mark that number, 24,783 on Nifty spot. If we trade today below 24,783, that is definitely not a good sign. So I'll be very closely watching the developments in Iran, Israel. I'll be closely watching. See what happened even news front, let me tell you. When Trump is requesting China to interfere and tell Iran not to close the Strait of Hormuz, that is not a good sign. Trump is requesting China to speak to Iran. If Trump was so powerful, for sure he is. I'm not disregarding his power, but why should he request China to interfere? Can he not take it on the horn with Iran? He is asking China to come and ask Iran not to block the Strait of Hormuz, and yet they are yet to block that. But Parliament has already given a green signal to them, and it's now the turn of the leader to take a call. But if that happens, and look at where crude oil prices are right now, definitely above $76 per barrel, which I mentioned right at the beginning. So for me, these are not good signs. And for me, at one end, Accenture, where the results are very important, and we are heading towards July month when the result season will start in. But for me, results are important, Brent crude price is important, dollar rupee is important, and the news flows around which is happening tells to me to be optimistic. But you have to be very cautious, you have to be very sector specific, stock specific. I'll tell you, be in only defense stocks like BEL, HAL, be in only IT stocks like Persistent, Coforge and Tech Mahindra, and be in pharma stocks, yes, where I mentioned names such as Laurus Lab, Divi's Lab, and I even mentioned about Glenmark. So you have to be in defensive right now. This is not a place to aggressively buy the market. Let all these news flow subside. Let me get clarity on all these news flow, and then one can take big position. When war is happening, and that too, you have so much of destruction happening in Iran and Israel. Both the sides are not giving up. There is no de-escalation happening whatsoever. Ceasefire is not happening. US is now joining. Now they are asking Russia, China to come in between and do all these de-escalations and the ceasefire, where US has already started participating in the war. These are not definitely good signs for me, Sakshi.
Okay, Rudra, we'll also look at some of the stocks now to take your view there. Let me also just pull up for all our viewers some stocks that they can also look at right now. There's only some green in the defense stocks in the markets. BL, are leading that rally. You're also looking at names like Oil India, ONGC from the oil space. There is from the PSU basket some move as far as NHPC, GAIL, IRFC is concerned. You also have some FMCG names like HUL up. Trent is higher from the retail basket. You're also looking at telecom stock Bharti Airtel, that's in focus right now from the large cap space as well. Let me also just look at any other stocks that we should be marking for all our viewers. Apollo Microsystems, remember this stock really rallied sharply, gave multifold returns to investors in the previous setup in the defense move, 6% higher for this one again. So that's again in focus. Defense names are back. You can see RA Drugs as a small cap pharma name that is up in trade right now. Those are the kind of names that are hovering higher. Let me discuss with you, Rudra, your suggestion on the FMCG stocks. Are you looking at them or completely overseeing them?
No, Sakshi, I'm definitely not looking at FMCG as a sector, and I'm making it a very, very clear point here. And please make note of these levels which I'm talking. On Nifty, the Friday low is 24,780. I'm referring to spot level. If we break and close, let me again repeat, if we break and close below 24,750, I will say bulls have to get out of your long positions and your trading longs. I'm not talking to investors who are having a longer time frame, who understand company well, sector well. You don't have to panic, but I'm talking for short-term traders. Nifty closing below 24,750 on Nifty spot is not a good sign, and that will be the first sign of alarm bell telling me to step aside from this market, from the long positions what you have, especially for all short-term traders. And similarly for Bank Nifty traders, I'm giving you the level. On Bank Nifty, the level is 55,500. Both these levels are below Friday's low, and if we break and close below this level, that confirms to me that yes, positionally market has become weak, and I will tell that only when Bank Nifty closes below 55,500, currently trading at around 55,950 on spot, and once we trade below 55,500 and Nifty below 24,750, I say bulls have to step aside from your long position. And those of you who want to buy this market, and I am also bullish for medium to longer time frame, no doubt for very short term, because of crude oil going up, because of Iran-Israel issues, and because of even dollar spiking against rupee, I am not very positive for very short term. And if you want to still be a buyer in this market, pick up stocks from defense, pick up stocks from, let us say, pharma, and pick up stocks from IT. And from these three sectors, that is pharma, IT and defense, I am very particular on the stock names which I have already given to you, that is BEL and HL from defense, from pharma, Laurus Lab, Glenmark, as well as I spoke about Divi's Lab. And also when it comes to defense and pharma, I have spoken. Also when it comes to the other sector, that is defense, I said about pharma. And also for me, if you want to pick up specifically some stocks, keeping aside the sector, but where you have valuation comfort, look at Indus Tower. For me, this stock can do very, very good irrespective of market. Yes, Indus Tower at 400, 405 is a great buy. So you have to be very stock specific. Look at even Indigo. I know crude oil prices going up is not good for Indigo, but if
Yeah.
you get Indigo at around 5,200, I will be a buyer in Indigo. Indus Tower looks good, Bharti Airtel looks good. So you have to be very stock specific in this market, and I am very cautious on this market for short term, medium to longer time frame. Yes, I am bullish.
Okay, yes, and Indigo is something that you've consistently marked out for all our viewers, Rudra, as one of your topmost, choice of stocks when it comes to long-term wealth creation. You have repeatedly talked about that, and of course, we will continue to put that out for all our viewers to really watch out for as well. Now, let me just talk to you about some of the other key sectors and stocks that we can probably look at. How about the capital markets related stories? How are you looking at stocks like BSE, CAMS, CDSL, K Fintech? On BSE today, there is another Goldman Sachs report with a neutral rating and a target price of 24.30. Remember, we have been constantly talking about how the expiry decision has been something that has been creating some knee-jerk reactions on the stock. Now, finally, the decision has been taken there. There will be some clarity. What after that on BSE, and how would you look at rest of the other stocks as well?
Sakshi, I'll be crystal clear on my view. I might go wrong on my view, but I don't want to give a two-sided opinion. I'll be very clear. When markets are not doing good for short term, you can't expect capital market related stocks to do good overall. Second most important point, no doubt these are great companies, but for me they are not great stocks right now. Yes, BSC return has been over 100% in last 3 months if I am not wrong, and it is an F&O stock. We are not talking about a non-F&O stock. If an F&O stock has gone up 100% in 3 months period, some time-wise consolidation can happen here. Undoubtedly for me they are great companies. I'm not talking about the company's performance. I'm not against these stocks, but I am against their valuation. I am against their move which we have already seen, and I am against buying them right now. If you have bought it already, yes, you might hold on, but if I was in a place where I had bought it earlier, I will definitely book some profits here, and I will go for companies where I have more valuation comfort. I will switch to sectors where for me at current market price it gives me a decent margin of safety. For me, IT is one sector where I have margin of safety. Pharma is another sector where I have margin of safety. And yes, very specific, stock specific, you have some safety even in defense as a counter. For me right now, even railways are emerging as a good sector to look into. Might be after the recent correction what we have seen in Titagar wagon, or even if you see Jupiter, or even if you see other stocks like your IRCTC, RVNL, yes, they are offering some amount of valuation comfort, and I'll use these dips to buy, but you have to be very sector specific right now. Capital market fresh buying is definitely avoid. If you have them, book some profits for sure, or if you want to hold them, yes, hold with tight stop losses if you are a short term trader, but I will definitely not advocate a fresh buy into any of these stocks. No doubt they are great companies, but they are not great stocks to me at current market price, keeping in mind valuation as well as margin of safety.
Okay, fair point. I hope this has also helped you out in understanding a clear strategy there. How would you look at, some of the other stocks that are on the brokerage houses radar? Like, I'll talk about the cables and the wires segment. We talked about FMCG, but this is FMEG, the electrical goods that are fast moving. There was a time when polycab used to be discussed almost on an everyday basis. Rudra, you would remember last year when the entire space was on fire. You could see Polycab, a lot of the other names also buzzing, IPOs coming in the same aspect as well. The stock has tested volatility, come back, to the all-time high levels as well. Now, Jefferies has come out with a report. It says that it has a buy call, a target price of 7,150 now on the company as well. They also believe that since March of 2025, the stock is already up 25%. It's trading at 34 times FY26. It's earnings as well, just above the 4% of 5-year average. How would you really look at Polycab right now, and what happens to the other cables and wire segment? Do they still interest you?
Sakshi, very, very clear view again. I will definitely tell yes, Polycab is a great company, great stock, buy it at any price, have it in your portfolio, you will make money. Irrespective of the sector, these are great companies, great stocks. Buy it at any price, you will make still money over a period of time. And one such stock is Polycab. Just because of this great question from you, Sakshi, I am now naming 5 stocks which fall in the same category but from different sectors. Look at Bharti Airtel. Again, for me, this is a great stock, great company. Buy it at any price, have it in your portfolio. Look at similarly Indigo, which I've always told you. Yes, now because crude oil is going up, Indigo will definitely come down, and levels closer to that 5,000, 5,200 will be a great level to buy if you get Indigo
Okay.
there. Wait out and see if you can find out these stocks at those great prices. Look at again Bajaj Finance. Stock at current market price is still a good buy. The next Bajaj Finance is Bajaj Finance. But if you get any dip in this counter because of overall market correction, yes, Bajaj Finance closer to that levels of around 800, 850, it will be a great buy now. So after all corporate announcement, stock is now nowhere at 9,000, 10,000 level. Because of those corporate announcements, the stock is back to that 900 level. But yes, 800, 850 will be a great level to buy. So for me, Bharti Airtel, Polycab, which you mentioned, Sakshi, Indigo, HAL, and Bajaj Finance. These 5 stocks, have it in your portfolio, and you will make money over a period of time. You can buy them and sleep well in the night without any trouble. No need to see what is happening in Iran, Israel. No need to watch what is happening for crude oil prices, because these are great companies and great stocks which will give you return over a period of time. So again, repeating the 5 names: Bharti Airtel, Polycab, Indigo, HAL, Bajaj Finance. These are stocks to own in your portfolio, and over a period of time you will definitely make money irrespective of what is happening around the world.
Okay, got that. Let's also focus on, we'll definitely look at these 5 stocks, pull it out in a chunk for all our viewers to really see where Rudra is really most bullish on. Let me talk about the new age space as well. And within that, in fact, I would want to talk about again, our favorite stocks to talk, that are Zomato and Swiggy, that we always keep discussing at each level for you to really assess, since there is a large retail interest. A lot of young investors really look at these new age stories because they relate with these companies on an everyday basis. They deal with such companies, but it's important to track and understand fundamentals and technicals both of such companies and find out whether they are great buys at each level. How would you look at Zomato and Swiggy at this point in time? Are these accumulation zones? Are you actually not paying that much attention right now after having initially put in money? What would you do now?
Very, very clear answer and one line answer, Sakshi. If you want to be in this sector, new age sector, only 2 stocks which I will keep recommending again and again. One will be definitely Eternal or Zomato, and second stock will be Paytm. So Swiggy, yes, off late you have been seeing good move on the chart. It has given a short term breakout also above the 375 zone and staying above that. Yes, Swiggy also will be a good stock to have, but I will still prefer Zomato over Swiggy, and I will have Paytm for sure if I have to be in this sector. So 2 stocks, or if you want to add a third one, then I will add Swiggy as the third stock. One will be Paytm, 2 will be Zomato or Eternal, and 3 will be Swiggy. So these are the only 3 stocks from this sector which you can definitely buy and have it in your portfolio.
Okay, got that. Now, Rudra, another one that I wanted to discuss with you is as far as Ola Electric is concerned. Now, we do see some equity getting exchanged hands, and that's why the stock is further lower. Now, stock is trading at around 44 odd levels. The stock is sharply lower from its IPO mark. From its all-time highs, it's almost dropped 40-50%. For those holding since IPO, believing in its long-term story, what would you say? Again, a story that a lot of young investors have been looking at.
Definitely an avoid rating, definitely no buying even here after that 40-50% kind of a fall, and I will avoid Ola Electric. If you have it in your portfolio, daily chant 101 times Om Namah Shivaya and only God can save you. I don't have any other comment on Ola, but these are stocks which are wealth destroyers not to have in your portfolio. If you say I have a very long time of horizon, I'm sure when people bought Ola, they never had that long time horizon of 5 year, 10 year, 20 year. Now they have no other choice seeing the current market price to have the long term horizon, because you have no other option but to have that 5 to 10 year kind of a horizon from now on. I want to make money in stock market not out of a specific stock only. So if this is not a stock which you have to own, I will buy Ola Electric later. Why to waste time on these type of stocks? Capital is not available in unlimited quantities and abundance to have these stocks in your portfolio and waste the opportunity cost. I will definitely avoid these kind of stocks even for very longer time horizon. Let there be a revival in company, let there be a change in numbers, then I can get back to these companies if I really want. Why I have to pick up only these stocks when you have plenty other opportunities elsewhere?
Absolutely. Okay. So I hope this has also helped you out in understanding how should you be looking at this stock there. What about the banks, NBFCs, small finance banks? There are some norms that are changing now. How are you looking at this space and what's your fresh approach here? You did talk about Bajaj Finance as your all-time favorite stock, which you have repeatedly talked about as the large NBFC stock that must be in everybody's core portfolio. Small finance banks are again in focus because of the new norms of PSL that are in focus again. How would you look at this basket too?
Yes, Sakshi, whatever the reduction in priority sector lending has happened for the small finance bank fundamentally from RBI, that's a great news, because the NPAs will reduce for them and you don't have to allocate more funds into that particular sector of lending. So for me, that's a positive news, no doubt. And yes, you can pick up stocks, whether it is your small finance banks, you want to pick up Ujjivan small finance bank, you have many Utkarsh, you have many names there, but somehow, except for this news flow which is positive, I don't have such a great view on this as a particular sector to be into. And yes, these are stocks which some of them are owning. One of the stocks which I was very bullish from those 650, 700 levels was AU Bank, and AU Bank has already done enough. And if you get any dip there, yes, that will be my first choice to buy. If you want to pick up this as a particular sector where you want to be in this sector, then yes, my top pick will be AU Bank. And AU Small Finance Bank has already given a big move from those levels of around 540. Stock is now closer to that 800. So the move has been very fast and quick in a very short period of time. Might be now any dips to levels closer to that 750 mark, I will look at entering into AU Bank if you have to be specifically into this sector only. Or else, for me, this is one more sector where you have to have a choice on the stocks what you want to buy.
Okay. Let me bring in some more sectors for you. One more theme that we used to always discuss in the recent run-up was the EMS space, especially Dixon Technologies and Keynes. They used to be our go-to names to discuss, EMS Limited, Amber. How are you looking at Dixon and Keynes particularly? How are you looking at them at these prices and what is the outlook?
Sakshi, this is another stock which you have to have in your portfolio, and they keep becoming more and more expensive on valuation.
Yeah.
So for me, whether it is Dixon, whether it is Bajaj Finance, Indigo, HAL, Polycab, Bharti Airtel, they are all always expensive stock for a reason. The reason why they are expensive is because they have clarity and they have earnings which is very clear for the future what they are getting. Wherever you have clarity in terms of the future earning, those stocks will always be expensive, and that is the reason why these stocks are always expensive, and they will remain expensive for a long period of time. So for me, Dixon is a buy at current market price, and on dips to levels closer to that 13,000 mark, keep accumulating Dixon into your portfolio, you will make money. So another stock which you referred to was
Dixon and
CAMS.
Keynes Technology, Kaynes, Keynes Technology.
Okay, yeah. So Keynes is another stock which is only into the equity market. Yes, you don't have it in F&O, but yes, Keynes Technology also at current market price and on dips to levels closer to that 5,400 mark. So kindly make note, 5,400 on Keynes, and on Dixon levels closer to the 13,000 mark will offer a great buying opportunity. Yes, buy it at current market price because I'm not sure whether you get those levels, but accumulate it over a period of time. Don't buy everything at the current market price. Dixon on dips to levels closer to that 13,000 mark, and also as I mentioned now, Keynes also towards the dips to levels closer to that 5,300 mark will be a great buying opportunity, and you have to have them in your portfolio.
Okay, got that. You know, the first half an hour, 40 minutes are now nearly done for the markets. Rudra, how are you assessing the situation now? 250 points lower for the markets, 24,858. There's a near 800 point slump on the Sensex as well. Is it now looking more tough to see a buying on dip from this level?
Sakshi, I am very clear in my views, and I also mentioned it last week. I am mentioning it even now. Rudra, who is generally a very bullish guy on markets, is turning cautious on this market, and I might be a bit early for that. And I have reasons both fundamentally and technically. But yes, I am not gung ho on this market for short term to buy. In fact, there are a lot of stocks. If you are a good trader who understands risk reward, who understands risk management well, you can even look at shorting opportunities in this market for a very short term, which will also act as a hedge against your long term portfolio. There are some stocks which I cannot exit from my portfolio because they are for long term. Yes, for that, very short term hedge can be taken by shorting this market, and there are a lot of weak counters where we can focus on that. But seeing what has happened already in the last 45 minutes time frame for today, I am definitely continuing to remain cautious. Mark that level of 24,780. If Nifty closes below 24,780, and similarly I told on Bank Nifty the level is 55,500. If Bank Nifty closes below 55,500 and Nifty closes below 24,780 for short term, definitely this market will be weak. And if you ask me above what level you will turn extra bullish on market, yes, for me Nifty has to cross 25,200. Till we cross 25,200, we are still not out of the woods. Let market cross the 25,200 and let crude oil prices come below $75 per barrel. Very simple analysis I am giving. Watch crude oil prices, Brent crude spot level. If Brent crude spot level comes below $75, Nifty goes above 25,200, then I will say yes, all the negativity is gone and dusted, you can go long. But I'm not saying stay away completely from market. What I'm saying is if you are that bullish fellow who wants to buy this market on every dip, be very specific in your sector and stock selection. Be in defense, be in stocks like BEL and HAL, be in pharma, be in stocks like Laurus Lab, Glenmark and Divi's Lab, which I mentioned. And if you have to be stock specific more, look at stocks like Indus Tower, look at stocks like Bajaj Finance, Bharti Airtel, Indigo, Polycab. All these are stocks which you can have in your portfolio, and you have to be very stock specific and sector specific till this cautious stand in market is taken off. Let's say tomorrow we have new news flows to come and we see crude oil prices falling down, we see changes in geopolitical tensions which are there, we see, let us say, de-escalation and ceasefire happening, then I will even change my view accordingly. But then till these changes happen in market in reality, I will remain very cautious in general in this market.
Okay, got that. And there on your screens, viewers, you can actually see the listing of Aditya Birla Lifestyle Brands, and it has listed on a positive note, 1% higher. You can see the levels 24,852 for the Nifty and 174 levels. As far as the Aditya Birla Lifestyle brand is concerned, you can see a positive listing on that one. Remember, Aditya Birla Lifestyle brands have been demerged into a new company from the Aditya Birla Fashion and Retail, and now the listing has happened for Aditya Birla Lifestyle brands. Now this will now trade in the T to T segment, that is trade for trade segment for the next 10 days after the listing. And remember, for all those investors of Aditya Birla Fashion and Retail who held the stock on the record date in the month of May, on May 22nd, you tend to gain one stock each for each one held for Aditya Birla Fashion Retail in your portfolios with this listing that has come in today as well. Now, this is as per what has happened is that the trading members of the exchange have effected and have told that from now onwards, Aditya Birla Lifestyle will be a listed entity. It is a demerged entity from Aditya Birla Fashion Retail, and the script will now be available for a T for T, that is trade for trade segment for next 10 days. It's a special segment where all the transactions are actually settled through delivery. In this T to T segment, as per the rule, no intraday trading or no BTST trading is allowed for the next 10 days. So remember that in case you're looking at this stock as well. So now, of course, remember, Aditya Birla Fashion Retail had said that the board had allotted 122 crore shares to the shareholders of the resulting company of the demerged entity based on the eligibility on the record date. So, for all those 122 crore shares that have been allocated to eligible shareholders, those who held the stock of Aditya Birla Fashion and Retail in their portfolio on May 22nd, you tend to gain this stock as part of this demerger and this separate listing that has happened. The shares were demerged and issued to the investors, the eligible shareholders, on a 1:1 basis, which means if you had one stock of Aditya Birla Fashion Retail in your portfolio as on May 22nd, you will now get one share of Aditya Birla Lifestyle shares as for one share held. So remember that as well is what you're getting to understand. The face value of each one share of Aditya Birla Lifestyle brands is 10 rupees. That's something that you should be looking at. So that's where the live visuals are coming in. Let's quickly go across to Rudra to understand after this live listing what his view is on Aditya Birla Fashion and Retail, the group as a whole. Of course, the newly listed entity will be only available for T to T, not intraday trades and BTSC right now.
See, specifically, Sakshi, ABFRL is a stock which has just fallen like a 9-pin and a pack of card. And if you see the price level, it was at around that 97, 98. And from there, non-stop fall has happened towards this 70, 73 mark. And that correction has been a correction of 25% on a stock which was in F&O. And for me, that is not a good sign. Look at ABFRL currently. Yes, because of this news, whatever you have on the listing front of one of its group companies, yes, you have some amount of respite. But for me, it's a clear avoid. Even at current market price, ABFRL at 73, 74, I will not be a buyer. Let the trend change or reverse, then let me have a relook into this counter if I have to. And I will definitely avoid this sector or I will avoid this specific stock. And I will also avoid this group of companies which are there as of now. So for me, avoid marking or rating on all these group of stocks, and I don't track them closely also, and definitely on charts right now. For me, ABFRL doesn't show any signs of recovery yet, and let me see some amount of bottom formation. Let it hold that support of 70 and then make a move towards that 80, 85 mark. Then I can have a relook towards that. But at current market price, why ABFRL when you have stocks like Trent? I will still go and buy Trent instead of ABFRL. And why do I have to put my money into these wealth destroyers? Rather go and put your money into Trent, which will still be a wealth creator. Even in negative market, bad market like today, see how strong the stock is holding. So to my previous list of stocks which I had, those great companies, no doubt valuation is expensive. Look into Trent as another stock to add into that portfolio of Bharti Airtel, Polycab, Indigo, HAL, Bajaj Finance. To that list, please even add a Trent. This is another stock which you can buy at any price and hold on to your portfolio. Over a period of time, you will make money. At least the downsides in these stocks are limited. No doubt valuation is the only concern because of clarity of earnings. These stocks are always available at a higher price and higher valuation. But still you will not lose money. You have to only spend some more time in these stocks where the downside will be limited because of their great visibility of earnings. So for me, Trent is a definite better option compared to the ABFRL and other stocks which are there in the same sector.
Okay, got that. Well, Rudra, we will leave you on that note. Thank you so much for being with us on the show and helping all our viewers understand the key strategies that you expect to be, exerted as far as the markets are concerned. Your cautious optimism is something that we will now remember and keep in mind at this point in time as the new world order is kind of dealing with these fresh fears on geopolitical tensions, and we hope that things sort out soon so that things can be back on track and the sentiments are also seen improving. Thank you so much, Rudra, for being with us on the show. All right, viewers, you can actually see 24,844. Now we are further down, 267 points lower on the Nifty, near the low point of the day. You can actually see most part of the stocks and sectors are actually down. All the sectors barring media are down in the red. IT stocks have actually lost the most today, 1.6% lower. Autos are down, FMCG, banks, financials, realty, metals, even the broader markets, they're all down in trade. From the media stocks, it's Z Entertainment that's rising. You can see a 5% uptick on that one. Defense stock is clearly, or the space is completely into focus. You can see HAL, BL that are on the rise. Shipbuilders like GRSE, Mazagon that are on the rise. Drone makers like Idea Forge is on the rise. Astra Microwave. You can see all these stocks are actually hovering much higher in trade. So the defense space is currently buzzing in this week setup in the markets. Railway space, some of those stocks are also inching higher. Titagarh Rail, IRFC, some of them are seeing the buying action continue as well. You're also looking at several other smaller pockets, oil and gas that's also in the news. And of course, because of the rising crude oil prices, the upstream companies, Oil India, ONGC, these are the companies that are actually hovering higher in trade. We'll continue to keep an eye out on all of these segments and how the news flows are going to be impacting these spaces throughout the course of the day. So stay tuned with us on Business Today Television as market coverage continues. And of course, if you have doubts about the stocks in your portfolio or your strategies on your stock portfolio, ask away all your questions on daily calls. I'll be back at 12 noon to address all your queries with top market experts.